Hello, everyone. Welcome to Money Hour Radio, a show where we try to help you grow your money, pay less taxes, and have a beautiful retirement. What could be better than that? I am one of your co-hosts, Ben Barzideh. I have my co-host, Matt Nadeau, here.
Hey, everyone.
We are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located right here in Barrington and serving the greater Chicagoland area. We are fiduciaries, and as an independent, family-owned firm, we truly have the freedom to focus solely on your interests and not some corporations or those shady private equity companies. And by the way, be sure to watch our segment titled How Private Equity is Ruining America. It's on our YouTube channel. It's excellent.
Yeah, make sure you go subscribe. I mean, that's a pretty big headline, How Private Equity is Ruining America, but I think it's excellent. Please tune in, subscribe. You can listen to it. And of course, if you're one of our clients out there, we wanted to take a moment and just say thank you for listening. We appreciate the trust you place in us. And of course, we love every one of you. And we have a great show planned for today. We're going to get right into our topics. The one big topic we're not going to spend really any time on, but if you're driving, you're traveling, you've heard it, the government shutdown, it's finally over. Hooray.
Yay.
You know, all right. Much ado about nothing. Just the longest ever. Again, more headlines than really newsworthy at this point, but at least it's over.
For people traveling, that's good news.
Yeah. Hopefully it makes your travel, especially around Thanksgiving, easier. But let's get into the other topics we want to talk about. One is we want to talk about this $2,000 tariff rebate that was thrown out there. What does it mean? Are you going to get paid? And then after that, we really want to focus on tech and the AI tech area. Really, is it running out of gas? And we're going to talk about, as there's been a little slowdown in that area, what that means. And then later in the show, we're going to talk about a specific type of insurance product. It's called an Irrevocable Life Insurance Trust. You may have heard it called an ILIT. And that is a very powerful product for some people that can help you reduce your taxes. So you don't want to miss that segment either.
No doubt. And before we start, we encourage you to subscribe to our YouTube channel on moneyhourradio.com, where you can view this week's episode along with previous ones. You can also subscribe to our weekly economic newsletter called the 5-Minute Market Brief. It's informative, succinct, easy to read. We get a lot of good reviews on it. You can sign up for it on bnwealth.com. And lastly, follow us online at bnwealth on our social media pages on Facebook and Instagram.
All right. Well, let's jump in our topics. Hey, Ben, did you guys hear that President Trump is sending everybody $2,000 tariff rebate check? It's like, yeah, all right. We're getting paid.
You do know that it's just an idea so far, right? And it's not happening anytime soon. Probably right before midterms next year.
Of course, there's always a catch. And the problem is like, what if my wife's already ran out and bought something with that money? I told her it was coming soon, Ben. So I guess we better get those receipts so we can take them back.
Maybe. All kidding aside, some details came out this week about the proposal from Treasury Secretary Scott Bessent. And it's for households or individuals making less than $100,000 a year. And that's about 59% of U.S. households, or about 77 million households, given that there are roughly about 130 million households in total in America. And it could cost around $154 billion. And tariff revenue this year so far, year to date, has come in around $227 billion so far, according to a tracker from the Bipartisan Policy Center. And the Trump administration is aiming to show that it's making an effort to address Americans' concerns about elevated prices and shining a positive light on tariffs with the American people and probably the Supreme Court as well, allegedly.
That's going to be a whole other topic. Yeah, that's a topic for another day. That's a big decision. Well, let's switch this up because, you know, what's been really driving the economy for a while, we've talked about it, is tech, it's AI. And now the question is it finally running out of gas? And when we look at the NASDAQ, which is definitely a proxy for tech and AI, it's had the worst couple of weeks it's had, going back to when we had those April market drawdowns earlier this year. And the losses in the, mega cap tech and the AI linked stocks have weighed on markets. So is tech and AI running out of gas? And if so, what would that do to the overall market, since really tech is what's been pulling the cart in the market this year? And it accounts for most of the gains, and many of the other areas in the general market are just limping along. So investors are now going to have to be forced to address the biggest concern about the AI boom. And it is something, if you've been listening, you know we've discussed on our show numerous times, which is this tectonic gap between the amount of money being spent to build out AI capacity. So this is the capital expenditure from these big mega tech firms and the paltry amount of revenue that actually AI is generating. And here's the bad news. It's really not getting any better.
And if there was a singular event that highlighted this discrepancy in the last couple of weeks, it was the announcement that Apple is paying Google only $1 billion for Gemini to be the underpinning of a new AI-led Siri rollout. Now, $1 billion is obviously a lot of money, but in the context of trillions being pledged, AI bulls would have hoped Apple would have needed to pay a lot more. And the small price tag is just another example of AI not really being worth that much to the end user, at least just yet.
So is it really more a sign that Apple is just smart with their negotiations?
Maybe.
All right. Well, there's other similar headlines touching the same theme. So Oracle, their enormous spending plans on AI data centers capacity are getting so high, it actually might mean that there's negative cash flow going forward. And the bond market noticed as Oracle credit default swap prices have nearly doubled in price over the past month. And similarly, Meta or Facebook, which famously backed the wrong horse on the metaverse just a few years ago and wasted huge sums of money, has seen its stock price drop post earnings, not because of quarterly results, but instead because of enormous spending plans announced, which is reminding people of that metaverse debacle.
Now, here's the bigger problem for the market. Without AI enthusiasm, the year-to-date rally would be much, much smaller. And without AI-linked capital expenditure spending, economic growth would be demonstrably lower and slower. And the S&P 500 is trading at a near-perfect scenario valuation right now. And in this context, any headlines making investors further acknowledge this capital expenditure versus revenue gap, and just the broader question of what happens to all this data center build out if people won't pay for AI, either explicitly or implicitly, is sure going to keep pressure in tech and the broader markets.
I guess we got to get back to the main question then. Is tech and AI running out of gas? And I don't think we should say that is the case, at least not yet. But obviously, we're starting to show some serious cracks, and it's concerning, and the market is being forced to confront it. And since tech is a gigantic part of the weight of these common indexes, like it's 30% of the S&P 500 and accounts for most of the gains this year, any kind of tech-induced market crash could be bigger than a typical market crash.
For now, though, in our opinion, this should be viewed more as a sobering moment rather than a larger indictment of AI enthusiasm. We're still very bullish, but we're definitely more concerned, and we'll let you know if things do get worse and if we feel it's time to get defensive, in our opinion. For now, though, we are not taking our foot off the gas. In fact, in some of our more growth-oriented, advanced and protect models that we manage for our clients, we're currently pedal to the metal, 100% on equities. We have tech, we have Magnificent Seven stocks, we have gold, we have silver. We like to invest where the momentum is. And we're also exploring adding rare earth investments in our models, as that could really be the next investment opportunity, kind of like AI has been.
By the way, when we say exploring, we don't mean Ben and I are getting shovels out and digging for rare earth materials. We're investigating. But remember, we monitor our investment positions every day. If things get worse and deteriorate, we will actually sell out of stocks and go heavier into bonds or cash while we wait for things to improve. We do not believe in riding market crashes all the way to the bottom. We will literally, if things get bad enough, get 100% out of the stock market at times. So we feel that if you're in retirement, it's paramount to have a disciplined sell strategy to exit the stock market and protect your money if the risk of a crash gets too high. do you have a defensive plan to help protect your money from a potential market crash? So if this resonates with you, please give us a call, reach out. We'd love to meet with you, go over your financial situation. You can reach us at bnwealth.com or call us at 847-780-2980. Don't go away. Welcome back. Thank you for tuning in. This is Money Hour Radio, a show where we try to help you grow your money, pay less taxes, and have a beautiful retirement. And I'm one of your hosts, Matt Nadeau. I've always got with me my esteemed co-host, Ben Barzideh.
Hello, everyone.
And we are founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive, dependent financial planning firm located right here in Barrington and serving the greater Chicagoland area.
And we're not just another financial firm. We are different. We have a simple motto: do great work, have fun, and give back. And that's why we created BN Giving, a way for us to invest in your purpose with you. How it works is if you become one of our clients and you're a faithful tither or a regular giver to a qualified 501c3 charity, just let us know. Each year, we will match your donation up to 10% of the management fee that you pay us. And as our firm grows, so does our collective impact. And we actually have a fantastic 10-minute video on our YouTube page on moneyhourradio.com, and it's titled The 6 Best Ways to Give to Church or Charity.
Yeah, so go to moneyhourradio.com to check this out. And definitely, if you're part of a church or another charitable organization, you should watch this, and you're actually going to learn a lot more about ways to give in a better way. And then we'd love to connect with you to help educate some more, because our team actually offers complimentary educational options on tax-efficient giving strategies that will allow your donors to maximize their tax donations, while the church or charity can actually receive more than you would otherwise. Now, by the way, if you're out there listening and you're not a regular giver, that's okay too. We would still be honored to work with you. But if you are interested and you want to explore on how to join our BN Giving community by becoming a client or to talk to your organization, please reach out to us at bnwealth.com or call our office at 847-780-2980.
All right, let's now talk about how an irrevocable life insurance trust, sometimes called an ILIT, how it can reduce your taxes. And if you want to leave more to your loved ones and less to the IRS, if you're someone with a sizable estate or just looking to preserve more of your legacy for the next generation, this episode is for you. An irrevocable life insurance trust, or ILIT, might be your secret weapon. It keeps life insurance proceeds out of your taxable estate, provides cash to cover estate taxes, and helps you gift strategically without triggering gift taxes. And it's smart, it's powerful, and it could save your family millions. And we're going to break it down for you today.
So I guess the first question is, what's an ILIT, an irrevocable life insurance trust? What is it? So let's just start with the basics. An ILIT is a trust that actually owns a life insurance policy on your life. So you're the insured, but the trust, not you, the trust actually owns the policy and then will receive that death benefit at your passing. So you're the one who will fund the trust, and the trustee uses the money to pay the premiums. Now, here's the key. Because the trust is irrevocable, you give up control over the assets inside of it. And that's actually the point. That's what is exactly what makes it so effective at reducing your taxes.
Here's what we mean. So as far as estate tax reduction, with an ILIT, the death benefit from the life insurance is included in your taxable estate. That means if your estate exceeds the federal exemption, which is currently almost $14 million per person in 2025, or double that for a married couple, so basically $28 million, your heirs could be facing a 40% estate tax on anything above that threshold. And you might be thinking, oh my gosh, who cares, 28 million? What does this have to do with me? I'm nowhere near that amount of net worth.
Well, I think all of our listening audience is above that, right?
Some of them are all part of the Kennedys and the Carnegies. And
that's right. Actually, here's the real problem with that. Some individual states have their own death taxes and thresholds before you go over that. And if they do have them, many of them are much lower than that 28 or, the 13.99 million per person on the federal level. And let's just keep it local here in Illinois. We've got one of the death taxes and it starts at $4 million. And it doesn't matter if you're married, you don't get to double it like you do on the federal level. And what's crazy in Illinois is if you're over the 4 million by $1, the tax is retroactive all the way back to $1, not just on the amount over $4 million. And it can be very costly for your heirs. For example, let's just say, as an example, $6 million net worth with no estate planning, your heirs could get hit with roughly, let's say, about $450,000 in death taxes from Illinois. And it can then go higher. It could be as high as 16%. But again, with an ILIT, the death benefit stays outside of your estate. And that means your loved ones can receive the full payout tax-free. It's just a simple shift in ownership, but a massive impact.
Another way that it helps is with liquidity. And many estates are tied up in real estate, business interests, or sometimes non-cash assets. So the ILIT, the death benefit, can provide cash to pay estate taxes without forcing a sale of those assets. And it can even loan money to the estate or buy assets from it, keeping everything intact.
So next is gift tax efficiency. So when you contribute money to the ILIT to pay these premiums, those are actually considered gifts. But with proper planning, like using something called a crummy notice, you can qualify for the annual gift tax exclusion. So in 2025, that's at $19,000 per beneficiary. So if your ILIT in this example has 4 beneficiaries, you could actually contribute up to $76,000 a year without even touching or dipping into your lifetime exemption. And if you have an existing life insurance policy, you can also put that into the ILIT. There is a 3-year look back that they use from the time you put it in to make sure that it qualifies to be considered out of your taxable estate.
It can also help out with multi-generational planning. So do you want to skip a generation? ILITs can be structured to take tax advantage of the generation skipping transfer tax exemption. And that means you can pass wealth to grandchildren or even great-grandchildren without triggering extra taxes. And it's a strategic way to build a legacy that lasts.
And then let's talk control and protection. So ILITs do offer control. You can decide how and when your beneficiaries receive the money, whether it's in stages, for specific purposes, or just be held in trust. Plus, because the ILIT is a separate legal entity, it offers some level of protection from creditors and lawsuits as well.
So for just some closing thoughts here, for those with sizable estates or complex legacy goals, an ILIT can be a cornerstone of a comprehensive estate plan. And by removing life insurance proceeds from your taxable estate, providing liquidity, and enabling strategic gifting, an ILIT helps ensure that more of your wealth goes to your loved ones and not the IRS. And if you are younger, by the way, and you have a sizable estate, you may want to look into getting life insurance for an ILIT while you're still young and healthy. There's, of course, a medical test for underwriting.
Yeah, I mean, that's always when it's the best time to do it. As with any of these advanced planning strategies, it is important and essential you work with a qualified estate planning attorney and a financial advisor to work together to tailor this ILIT to your specific goals, your family dynamics. And also, if you're in need of a financial planner, we'd be honored if you gave us an opportunity to talk to you. If our investment or our financial planning philosophies resonate with you, please reach out. We'd love to schedule a complimentary consultation. And in that consultation, we'll actually go over your specific financial goals, your situation. We can provide you with a financial checkup and just analyze. Make sure you're doing okay with your insurance, your taxes, your estate plan, and also your investments. And honestly, if everything looks good, you'll gain some peace of mind. We'll give you the second opinion that you needed. But if there are holes, then you'll know at least some areas that you need to look at fixing. And many people never have someone look into all these areas of their financial life. If we can help you, that would be great. If not, Hey, we get it. We'll still part as friends. So to explore becoming a client, reach out online at bnwealth.com or call our office at 847-780-2980.